According to Great Hill Capital chairman, Thomas Hayes, China has changed the game. Since the beginning of the year, NIO and other Chinese stocks have been beaten down due to geopolitical issues and threats of delisting. NIO, XPeng, and Li Auto have all lost more than half their value in just 2 weeks. Although NIO and other Chinese stocks are down, there is still good reason to remain optimistic. The fact that there are more bulls than bears on Wall Street that support NIO helps with this idea. NIO also recently debuted on the Hong Kong Stock Exchange to reduce regulatory risk and lessen investors' concerns. With the current war causing oil prices to increase, the urgency to rely on electric power has never been so urgent. According to Hayes, investors should buy into Chinese stocks, since their rise is imminent. Here is a snippet of that interview.
The underlying businesses, the China tech businesses, which have been hit the hardest, a day ago or a week ago, if you had asked money managers, what's the least thing that you'd like to own in your portfolio, they would have all said China. And we've been actively adding to our position. We've been in the position for a few months, so it's been a long slog. But what they did last night changed the game overnight. And, while the businesses were growing, despite the regulatory crackdowns, despite the zero COVID shutdowns, you had Alibaba grow revenues 20% last quarter, not 10%, and not take down their guidance of 20 to 23%. So the only two things holding these companies back that have huge moats around them were the Chinese government's positioning. Number one, the tech crackdown that started over the summer in earnest, started with some fines to Alibaba beforehand, and then the delisting risk, because a lot of retail holders of the stock in the United States were scared that they were going to get nothing, because that happened with China Mobile a couple years back in a previous administration, because they didn't have the fungibility of the Hong Kong listing. Anyone owning these China ADRs that have the dual listings in Hong Kong, these shares are fungible. So if you call your broker for a nominal fee, you can switch out to the Hong Kong shares and hold them on the Hong Kong exchange. So that's a non-issue. We did get forced selling and a final capitulation yesterday on those delisting fears in the last couple of days. But both of those risks were largely taken off the table last night when they decided to actively introduce policies to benefit the markets. In addition to the policies that you mentioned, Rochelle, the banking regulator said they were going to support insurance companies to increase investment in stock markets. They're going to outright just start buying stocks hand over fist, and they should, by the way, because they're cheaper than ever. And they're working with the SEC to resolve the Holding Foreign Companies Accountable Act to work out the U.S. listings. They actually recently approved a tech listing, an IPO in the U.S. in the past week and a half, which was the first one in a long time. They're also going to amp up the monetary policy and be proactive this quarter and grow loans, et cetera. These things are going to be critical. They did start this type of policy stimulus in November, but as we know, all stimulus and policy works on a lagged basis by about 4 to 6 months. So we're coming up on it, and we saw it this week with the high retail sales, and the industrial production numbers were good as well. So inevitably, it's the same thing. You get the crackdown 2 years before, the market goes into the tank, they assert their authority over business, they show the strength of their party, and then they realize they've gone too far because hundreds of thousands of people become unemployed. Unemployed people are not happy people, and that does not help with the transition. And both in China and in the United States, the number one job of a politician is to get reelected. They figured that out. They want the transition to go smoothly. They're juicing the economy, and I think you're going to see China stocks rip for the next 8 or 12 months into the China National Congress. I think when you look 2, 3, 4 years out, everyone's going to want it over $200 and beyond because this business is still cheap.
That's what's been happening this week in the world of NIO stock analysis and predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Financial Health right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of NIO stocks and predictions. If you enjoyed this edition of NIO stock analysis and predictions, leave a comment and please hit the like or share button. We'd really appreciate it. Are you still watching and want more? Check out last week's NIO stock analysis and predictions by checking out our NIO playlist.